Warren Buffett is one of the best people to go to advice for beginner investors. I mean, let's be realistic. Most of us aren't financial wizards, and we don't even hold a job in a financial related field. We're teachers, managers, mothers, engineers. Can the average person do a good job of picking stocks? Well, that depends. Warren Buffett has over 60 years of experience and invests full time. Historically, Buffett has insisted that investing doesn't require high IQ, but it does take experience to recognize a great investment, and that's good news for all of us. He also has several advantages that the average person doesn't have. Thankfully, he shares his basic strategies for all of us. If you're liking this video, then hit the thumbs up. Buffett has suggested 2 different sets of instructions for non-professional investors. If you lack knowledge about the stock market and are short on time, then check out these tips. Strategy 1. Put 10% of your investment monies into a short-term government bond. This is money that can be accessed quickly and easily, but isn't rotting away in a checking or savings account. Strategy 2. Put the remainder in a low-cost index fund. While this isn't the most exciting advice, it makes a lot of sense. Very few personally managed funds are able to match the expense-adjusted results of an index fund over several years. Plus, the expenses and the whims of the fund manager are too much of a disadvantage. In fact, this is the exact advice that Warren Buffett has left for the trustee that will administer his wife's trust. Assuming he loves his wife, it's probably good advice for the rest of us too. It doesn't get much simpler than this. It also requires very little time and attention. If you prefer to pick your own stocks, then you should probably follow this advice. Familiarize yourself with the stock analysis. Buffett has frequently given this advice to business students. It consists of analyzing every single stock on the New York Stock Exchange. When students point out that there are thousands, Buffett's response is, start with the A's. Warren Buffett has stated that it's easy to recognize good companies after you've researched a few thousand of them. Next, consider the margin of safety when you invest. Invest in companies that are available for a discount relative to the true value of the company. The greater margin of safety, the greater potential upside. The downside is also greatly reduced. Next, invest in businesses rather than markets. Buffett doesn't recommend investing just because a certain type of economy exists. At the end of the day, it's the quality of the underlying company that's most important. The economy rarely enters the picture. 4. Keep it simple. According to Buffett, having anything beyond average intelligence is unnecessary when it comes to investing. Stick with businesses that are easy to understand. It's easy to understand how a grocery store makes its money. Biotech companies, on the other hand, are a little more complicated. Next, be careful where you get your information from. Buffett once said, never ask your barber if you need a haircut. Who benefits if you follow a broker's advice? Be sure to consider the source. Unfortunately, the more mysterious the source, the more credibility we tend to project onto the source. You might doubt your friend, but you convince yourself that the old man on the bus certainly knows what he's talking about. Warren Buffett suggests an index fund for the armchair investor, but many enjoy investing and can do well on their own. It's important to put in the necessary work to find solid investments. If you're short on time, the index fund is probably your best option. If you're planning to follow Warren Buffett's advice, then comment below on the Buffett boat, so we all know who is working on living the diamond ideology lifestyle. Thanks for watching. Subscribe to the channel for more videos like this.